In this video, we're breaking down the top mistakes people often make with their Roth IRA, mistakes that could cost investors thousands of dollars and take a chunk out of their retirement savings. Are you making these huge 3 mistakes? Watch this video to find out what they are and how to avoid them. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And today we're discussing the top mistakes that Brian, in his 24 plus years as a financial advisor, commonly sees people make with their Roth IRAs.
Yeah, Michelle, everyone knows I like the Roth IRA. It's one of my favorite planning tools out there.
Yep.
If you watch this video until the entire end, you're going to learn more about the Roth IRA and these common mistakes that people make and save yourself a lot of money that you can apply to retirement later on.
Absolutely.
Also, if you're not a subscriber and you like the content of this video, make sure to hit that subscribe and like button.
Yep. And if you have comments, leave them below. We're always answering comments in the form of videos.
Definitely.
All right. So, Brian, I think it's really important for us to back up here and just for people watching who may not really fully understand the key distinction between the Roth and the traditional IRA, because it is a big distinction to make, especially from a tax point.
Definitely from a tax point. So when you make contributions to a traditional IRA, the money goes into the account pre-tax and your contributions grow tax deferred. Essentially, a traditional IRA gives you a tax break immediately up to whatever the income limits are for that year. And you're only taxed on when you take the money out, dollar for dollar. Okay. The key feature that separates the Roth IRA from the traditional is it allows for after-tax contributions. And these contributions, Michelle, grow tax-free.
Yeah.
Because your contribution is made with after-tax money, you don't get a tax break today like you do with the traditional IRA. However, you'll be able to withdraw the money penalty-free and tax-free if you're older than age 59 and a half and you've held the account for more than 5 years.
So the key difference is how they're taxed.
Exactly. Another difference between the Roth and the traditional is that with the Roth, there's no required minimum distributions. With the traditional IRA, you must start taking RMDs at age 73 starting this year in 2023, thanks to the recent passage of the omnibus bill in late 2022.
Yep, big changes there. So if you want to know more about traditional versus Roth, and we have a deep dive video on this, we'll put in the pinned comment and the description below this video. All right, Brian, let's get to it. What's the first mistake that you see people make with their Roth IRAs?
Well, the first one, Michelle, is not opening a Roth IRA. And, for some of you watching the video, we've seen the comments before that, not everybody needs one. You're right. But in most cases, this is a great place to start. So a lot of people who have workplace retirement accounts like 401ks bypass opening one because they think they only need one retirement savings vehicle.
Right.
Same with those who only fund a traditional IRA. This could be a huge mistake. With Roth IRAs being the only 100% tax-free investment account out there, gotta make sure I say that clearly, it makes sense to open one of these as soon as possible. Aside from the tax benefits with a Roth IRA, you can choose what you want to invest in versus in a 401k. Most of the time, your employer matches up with a financial institution and provides you with a menu of investment choices. So you're limited on what you can invest in, and it's not as flexible as inside the Roth IRA. There's 2 things in life that are certain: death and taxes. By opening a Roth IRA, you can at least attempt to control one of these.
Sure. Well, so for those who have a 401k, how should people prioritize their contributions if they have a Roth IRA as well?
Yeah. First, I would focus my contributions on where you get the highest percentage of matching dollars from your employer.
Okay.
Each plan could be different. Some may not allow matching Roth contributions.
Got it. All right. So what's the second huge mistake?
The second mistake is not knowing the contribution rules and putting too much into your Roth IRA or earning too much to fund a Roth IRA. Doing both of these can be very costly. And here's what I mean. Let's start with putting in too much to your Roth IRA. If you put in more than the allowed contribution limits each year, which is $6,000 if you're under 50 and $7,000 if you're over 50 for 2022, $6,500 for under 50, and $7,500 if you're over 50 for 2023. If you go over, you're going to be penalized 6% per year for every dollar over the limit. And that's 6%, Michelle, for every year you leave the funds in there. So let's say you contribute $7,000 in 2022 and you're under 50. That means you put $1,000 over the limit.
Sure.
6% of every dollar mean you would pay $60 per year until it gets fixed.
And you have to take back the additional funds after you pay the penalty, correct?
Yeah.
That's how it works.
Yes. If you catch that you've put in too much by the tax deadline for the year, Michelle,
Uh-huh.
you can remove the amount that is over the limit and any earnings that it made without paying the penalty. Remember, with the Roth IRA, you have until the tax deadline of the following year to contribute for the year prior.
Okay, so let's talk a little bit about making too much to fund the Roth IRA.
Yeah, your eligibility to contribute to a Roth IRA is based on your income level.
Mhm.
If you earn too much, you can't contribute to the Roth. The limits for 2022 are 144,000 if you're single, 214,000 if you're married, and for 2023 the limits increased to 153,000 for single and 228,000 if you're married.
So it's really important to keep an eye on
All
how
the
much
numbers.
you make any given year, huh?
Yes, and it changes all the time. So
Right.
stay up to date on it.
Absolutely. Well, that's again, it's why, paying attention each year to contribution limits and any changes, like you mentioned earlier, the omnibus bill and the Secure Act, stay on top of it. All right. What's the third mistake you see people make?
Yeah, this is a big one and a common one, and that is withdrawing from your Roth IRA too early.
Yeah.
The rules allowing a Roth IRA to be 100% tax-free and penalty-free are firm. Hold the account for more than 5 years and be age 59 and a half or older. Withdrawals prior to age 59 and a half will be penalized 10% by the IRS, and you'll pay taxes on the gains. And, there's a few exceptions to the rule, as always, such as you can withdraw tax-free if you've held the account for more than 5 years and you're using the money for a first-time home purchase, college expenses, birth or adoption expenses, and to pay for health insurance for the self-employed. But remember this is one key point of the Roth. Your contributions are always free from penalty and taxes since you deposited them contributions with after-tax money into your Roth IRA.
Key point there. All right. So, Brian, do you have anything else to add? Or those are 3 mistakes? That's it? All right. Here's the deal. You like the content of this video, hit that like button. Don't forget to subscribe and leave us a comment below. And we're going to put that video below in the pinned comment and description so you can do a deeper dive on the traditional versus Roth IRA. I highly suggest you check that out.
Definitely.
All right, Brian, thanks so much for this. Appreciate it. And thanks to everyone who watched.
Thanks, everyone.